Hello.
The same. It's just
Hi, everybody.
So that's
Good afternoon. Thank you for joining us for this afternoon's panel, aptly titled Risky Business Insurance. Hopefully, we haven't taken too much risk by agreeing to be on this panel. I am Baaba Halm, Vice President, Market Leader of Enterprise Community Partners. Honored to be moderating today's conversation around insurance. We are going to have really we have a great slate of panelists who have a lot to share and a conversation around the various insurance challenges, some of the ideas and solutions on the table. And we will have time for your Q&A towards the end. In a few minutes, we're going to have the panelists introduce themselves before we start diving in. I just wanted to take the time to acknowledge Shani's work around insurance and the work that they've been doing to support understanding what the challenges of their partners have been, looking at the underwriting guidelines that the city agencies have used, helping to really advocate at all levels of government for a solution. And Shani has been such an incredible partner to Enterprise and the other partners here, and certainly want to thank them for their efforts around making sure that insurance is front and center as we think about how we sustain affordable and supportive housing owners and operators. So you all are here, and we're expecting even more of you to join us because we all understand and recognize that the cost of insurance are increasing significantly. Property, liability, builder's risk insurance, and that it has a real impact on the operational health of supportive housing providers, how you maintain your operations, how you service your residents, and really how you remain a going concern. And with that in mind, our panel is really talking around what are the contributing factors to these rising insurance costs, what can be done, if anything, to tamper, to reset, to address these cost implications, and what are all the ideas and solutions that should be on the table for consideration and to further. So with that, I'm going to turn quickly to introductions by our panelists. If you can just introduce yourself and talk about how your work intersects with the insurance issues.
Hi, everybody. Patrick Boyle. I'm a senior director also with Enterprise Community Partners. I work in the New York market office, overseeing the policy and communications team there. Enterprise is a national nonprofit organization. We have been viewing over the past several years insurance issues really across the country. California, we have a market presence there, in Florida and different areas that have really seen skyrocketing insurance premiums and abandonment of insurance companies in some markets around the United States. So here in New York, we're really tasked with looking at the kind of New York specific issues around this topic. We've pulled together a working group of owner operators and other affordable housing advocates that I'll talk about a little later. But from the investment side, from our work as a financial partner to these projects, we see the sheer numbers of the increases and what that means to building operations and what that means to trying to get these projects financed and how challenging it's become over the past several years. So we're concerned about it from that role, but also a policy and programmatic role at Enterprise. We try to focus on what might help at the legislative level, budgetary level, what are some of the different things we can be looking at. So that's sort of been our focus into the insurance issue over the past couple of years.
Hi, my name is Amanda Hayde. I'm the Director of Operations at Camber Property Group. My previous life, I did emergency management with New York City, so I've experienced kind of on both sides of the issue. As a company doing development and preservation, every increased dollar that is going to insurance costs is taking away from our residents, essentially, whether it's CapEx projects or underwriting that we're doing. We have to run a very lean ship, I like to say, in affordable housing to be able to make it. And we just see our costs increasing year over year, and it's really starting to affect our operations and our buildings. So we're trying to do everything that we can, whether that's things that we can control and in areas that we can't control. We're trying to figure out the best ways to advocate for lower pricing.
I'm Jim Dill, Executive Director of Housing and Services. Housing and Services is 100% supportive housing. We have 726 units, 100 scatter site. The remaining are congregate. In terms of our history, while all our congregate projects are 60-40, that for all practical reasons, 3 or 4 of them have, since inception, been really 100% supportive housing. So this, we think, will make a difference as we get further into the discussion.
Hi, everybody. My name is Dustin Worthman. I'm a Director of Sales at Lamb Insurance Services. I'm the insurance broker of the panel. So my firm specializes exclusively in insuring nonprofit human service-related organizations. I'd say that the nucleus of our expertise is in the New York supportive housing, affordable housing arena. We've been a firm for just over 15 years now. Our CEO used to work on the carrier side, and if he was here, he'd tell you he saw a niche in the insurance brokerage market where the nonprofit, human service providers, that community was vastly underserved from an insurance standpoint. So he's a very entrepreneurial-minded person and decided to start his own brokerage that is totally dedicated to that space. So we work with many of the providers that are part of Shinny, and glad to be here and hopefully here to educate and provide some perspective on why the insurance costs are so tough to navigate right now. Thanks.
So thanks, everybody. And Dustin, as you talk about speaking about perspective, we wanted to start with the national perspective and certainly get some insight around what's contributing to these insurance costs. And so maybe you can start us off with that part.
Sure. Trying to decide if it's easier to stand or
Yeah.
sit. I might just come up.
Yeah.
This one working? There we go. So, again, just really quick, just want to spend about 10 minutes kind of setting the foundation of, the buzz term hard market that I'm sure many of you have heard over the past 24 months. Really, there's 2 sides of the story when we're talking about the hard market. The first being on the casualty side, right? All your general liability, professional liability, abuse, molestation, umbrella coverage. The main driving factor, right, when we're talking about increased rates on that side of your portfolio is what we call social inflation. I don't know if anyone can see the bullet points there, but things like erosion of caps of, punitive damages. Broader definitions of liability, tort reform rollbacks. Perfect example, even though we're talking nationally right now, New York was, the Children's Victim Act back in 2019, right? What social inflation is creating in the insurance market is a much higher frequency of lawsuits and claims being reported, and those claims being paid out at a much higher, reward or loss. So these claims that we're talking about from a severity standpoint that are much larger in payout, we refer to as nuclear verdicts. Really, this slide is meant to kind of show you the married trend between the amount of nuclear verdicts we're seeing now in the last 24 months versus the premium trends that is trickling down to your policies. So you can see from 2016 to 2019, less than 100 nuclear verdicts across the country. Again, claims that are over $20 million. Just in 2023, that number doubled to over 200 in 1 year, right? When we look at forecasting for 2024, that trend continues to be on the rise, right? From a premium standpoint, the trend it marries exactly the trend of the nuclear verdicts. The more nuclear verdict claims there are, the more frequency there are, the higher the payouts are, the more that trickle down to refill those claims reserves hits your insurance policies. So the other side of the coin is property, which I'm sure is near and dear to many of your hearts in this room. The main thing to remember on property is this is a global market, right? We're talking nationally right now, but plenty of my clients, you know, when I say, hey, like, did you see on the news, hurricane in Florida, massive freeze in Texas, wildfire in California? They're saying, that's great, Dustin, but, you know, I'm in the Bronx. Like, what does that have to do with me? It all comes back to it being a global marketplace. So when you see the amount of natural disasters that are occurring throughout the country, that's directly impacting the property rates that you're going to see over the next 2, 3, 4 years. Just last year, there was almost 30 natural disasters in 1 year. The claim payouts on that thus far is over 93 billion with a B. That number is still developing. A lot of those claims aren't even closed out yet, so that could be north of 100 billion by the time those claims are fully developed. Over the last 5 years, from a national standpoint, you're looking at over 100 natural disasters. And the thing to remember, right, due to climate change, due to global warming, a lot of these disasters, these tornadoes, hurricanes, mudslides, freezes, you name it, they're in parts of the country that typically we wouldn't see them. So from a risk standpoint, they weren't prepared for them, like the big freeze in Texas a few years ago, over $70 billion in claims. To bring it a little more locally, right, over the last 5 years, in New York, over $20 billion in incurred claims. In New Jersey, over $20 billion. So again, all these numbers from a 3,000 foot level to bring it back in to remind everybody that the property market is a global market. And everything that you're seeing on the news, right, that's affecting everyone's property insurance. The last piece, right, it seems like everybody in this room has got some kind of development pipeline now, and getting the budgets together for these projects and factoring in, hey, these are going to be my insurance costs for this project, but the project doesn't go down until 2-3 years down the road, and all of a sudden the cost is twice or 3 times as much. Right, that's a surprise no one likes to have, and really what's driving that is everything globally that you're seeing. The cost of materials is much greater now than it was 2-3 years ago for lack of supply chain disruptions, you name it. The cost of labor right now is much higher, just simply due to a talent shortage, and then you have inflation as a whole, right, globally. The replacement cost of buildings now is much higher today than it was a year ago. So when we're talking about construction projects, kind of inflating that budget from an insurance standpoint is definitely a good practice, because once you actually break ground or close on a deal, we know that the cost now is going to be more than it is in a couple years. So this slide, real quick, I just kind of wanted to paint a picture of the insurance kind of from a global standpoint from the marketplace. A lot of folks don't realize that reinsurance carriers are a big part of this puzzle. So the primary insurance carriers that are on your declarations page, they purchase insurance from reinsurance carriers. If you have $1 million claim, right, most folks assume that the primary carrier that's providing you insurance is the one paying that full $1 million. The reality is they're probably only paying about $500,000 of that, and the reinsurance carrier is taking on the rest of that claim. So when we go back to that nuclear verdict conversation, or the billions of dollars that we're seeing from natural catastrophes and natural disasters, the reinsurance carriers are the ones that are getting hit the hardest for this. Because of that, a lot of, there was 20 or 30 reinsurance carriers 3 years ago, we're down to 6 or 7 now. So the reaction to that, in order to fill their claims reserves, and the fact that there's less competition, is to raise premiums for the primary carriers, but also lower the amount of coverage that they're willing to insure, right? The capacity that they're willing to insure. So the way this trickled down to you, the providers, right, is you're going to get now a 25% increase, but the $5 million umbrella that you had is now a $2 million umbrella, right? So you're literally getting less coverage for more. And obviously that has a lot of people scratching their head. But I wanted to paint this visual because a lot of people blame, oh, it's the carrier, you know, it's a money grab, it's a money grab. Their hands are tied a lot too, because they only have a certain amount of capacity that they're able to insure. So they have to really pick and choose what risks they're willing to take on and how much they're willing to charge for it in order to obviously keep their claims reserves at an adequate level. Real quick, this is just kind of some data that we've crunched internally. 2024 pricing forecast, right? When we talk about this hard market and we talk about a flat renewal, right? A 10 to 15% increase right now, market-wise, is considered a flat renewal, right? The main kind of drivers of the increases are on the umbrella end, which we just talked about, and obviously the property and casualty. Auto, especially in New York, less so than nationwide, is definitely a hot button item, and that kind of follows the casualty side that we just talked about. Real quick, when you're heading into your renewals, some things to think about due to the challenges the hard market is bringing to us, right? We talked about carriers charging more and providing less. A lot of times we're seeing carriers lower liability limits, right? And they're lowering them in areas that are most sensitive for big claims. Coverages like abuse and molestation, covers like professional liability within the umbrella. In order to mitigate some of the premium increases, they're also raising deductibles, raising intentions, right? Putting some of the risk on your plate in order for them to keep the premiums, you know, somewhat feasible. We're seeing carriers switch liability coverage forms from occurrence to claims made. Given the amount of time I have, I won't dive into that right now, but if anyone wants to talk about that after, I'm happy to nerd out on that. But I think one thing really to keep a keen eye on is restrictive exclusions, right? Your liability limit might not change from $1 million, but if the carrier puts in an exclusion on abuse and molestation, an exclusion on assault and battery, all of a sudden, you know, your coverage is not nearly as broad, and it's eliminating, obviously, a very sensitive coverage that is why you're purchasing insurance in the first place. And then the big one, which I'm sure everyone's seen on their property portfolios in the last couple of renewals, right? Carriers are increasing the values of your buildings, right? The thing to remember is, from an insurance standpoint, we're talking replacement cost value as opposed to market value. So if it costs more to replace a building, to, you know, rebuild something from a fire per se, right? Right now, today, that's much higher than what it was 2, 3, 4 years ago, you know, when you initially developed the building. So we're seeing carriers increase those each year to kind of keep up with, you know, inflation on that end. And I think that's it.
Okay. That was sobering. Lots of information there. You know, in New York, we care about what's happening in all parts of the country. We care about the wildfire in California. We care about the mudslides. We care about all of it. But we want to understand what the implications for New York are in particular. And so let's now talk to our owners and operators, our New York owners and operators. And let's start with Jim. Jim, as you have started to hone in on the impact of the growing insurance costs, and you know your portfolio is primarily upstate, and so our discussion really is a statewide conversation. Talk to us about how you've been impacted as a supportive housing operator.
Okay, so to give you a little history, that It's been kind of challenging me to come up with apples to oranges, but in terms of our experience over the last 10 years, our insurance, as much as if I tried to level it, has gone up 25%. Of that, about 19% has been in the last 5 years. So we are seeing this acceleration. What we are seeing is a lot of it has to do with professional liability, particularly, and because we're in that bucket, so much of it's child abuse and that kind of stuff, and we're all single adults, but we're still in that bucket. What makes it difficult in terms of me to completely level it is that included in our professional insurance has been coverage that we didn't used to have, that wasn't around 10 years ago or even 5 years ago, such as cyber insurance. So that's been difficult to sort out. So that's why I had to do a bunch of leveling to come up with those numbers. The other thing that, in terms of property, we have spent really over the past, it's been now over 4 years. In our last renewal, and let me back up for a second, sorry about this. Because we are 100% supportive housing and a not-for-profit, we deal with a specialty carrier that specializes in not-for-profits. It is very strong in not-for-profit housing. And in terms of my experience with the Enterprise Great Working Group for Affordable Housing, I did learn that supportive housing is considered a less risky category than the plain vanilla affordable. So that's why I give you the caveat that we're 100%. I don't know what that means I know a lot of folks out here are maybe primarily supportive housing, but may have a lot of other activities. So I can't say that my experience or HSI's experience is going to be the same as yours. So on the property side, we have focused on, and in the last couple renewals, we actually took some deep dives into our carrier uses Marshall and Swift, if I think I have that name right. And we did question the replacement values, and we actually contracted with another firm, which we thought was deeper and respected by our carrier named Sedgwick. So they came up with what we thought was a more accurate replacement value. Yes, we paid more in premiums for that, but at the same time, at least, our broker will tell us that it helped us with our carrier because we weren't looking to save a quick buck. So we actually spent a lot of time with that. We are extremely anxious because over the past 12 years, we've had 3 significant losses. One of them was 12 years ago, but the last 2 were within 6 weeks of each other in 2 separate locations. So all these 3 were basically fires in tenant units, and we are quite anxious about what our carriers will come up with. In terms of supportive housing, and as is explained, basically the real global impact, we are getting signals that we need to be concerned that even if our carriers are comfortable with what we do, because in the intensive services, the supportive housing, that's why we are less risky. But in terms of, even if they start to back off on that, they will have the reinsurers who are global that may not be so focused on the intensive services that we have to protect our tenants.
So Amanda, Camber is a large owner of affordable housing in New York and in other areas. How is this issue impacting Camber's portfolio?
I would say it impacts everything that we do at this point. We have 10,000 units in New York City with about 1,600 additional units coming online. And the higher costs impact, like I said earlier, everything from underwriting, our business plans, budgeting, building operations, compliance, and all of this boils down to the services our residents are actually, experiencing in their homes. It impacts if our building operations go down, it impacts, our reputation in the community, it impacts our abilities to do deals with elected officials and things like that, and it's just this constant trickle-down effect that we're feeling. The affordable housing market is a difficult one to be in. I said earlier, we have to operate a lean and efficient, well-budgeted operation, and any costs that, start to get runaway, it makes things very difficult to do, whether that's utilities, insurance, labor, anything like that can really have a huge impact on our buildings, and we're seeing that now. I think one of the things we've tried to focus on, so much of this seems outside of our control, right? We can't change a lot of the pricing, no matter how hard we push back or the questions we ask. We try and be aggressive. We're, asking our brokers to be aggressive. We're asking them to go out to the market and, talk to people maybe that they haven't spoken before. But I think we've tried to focus on maybe some of the things that we can control. I mean, technically you can't control anything in life, right? But we're gonna try our best in some areas. And so really focusing on risk and loss mitigation, I think has been a win for us internally. In general, it makes buildings safer, it makes residents safer, which is our number one priority. And then I can't say if we've actually seen any reduction in premiums, but I think we have seen reductions in actual claims that have been put out. So if we can have less claims, maybe we can have some impact. I mean, I actually had someone ask me recently, they were like, is affordable housing actually inherently more risky? And I was like, well, you're the insurance broker, you tell me what you think. And so I think part of, Camber's stance on our buildings is how do we change that reality, and is it possible to change that narrative, within the public? Affordable housing is more than, I think, just what people see on TV. Is like they see, public housing, right? And it's so much more than that. It's rent-stabilized apartments. It's families with vouchers choosing to live in our buildings, right? It's preventing homelessness, right? That we're able to keep families and kids in the communities where they want to be. And so I think people really need to understand that, like, this can impact kind of like a much bigger social thing here. And so I think being able to focus on what we can control and then being able to push back and advocate. And so Shinny and some of the other groups, the work with some of the elected officials, I think has been extremely valuable in just getting our voices and opinions out there.
So I appreciate that. I mean, we all know the aims of what supportive and affordable housing are intended to do, right? To offer housing to vulnerable families and individuals and support low-income communities. And to me, that's not inherently riskier than any other type of housing. And so, I think we should all call into question the premise that supportive and affordable housing is inherently riskier to provide and therefore contributing to these rising costs. And Patrick, you've been leading a working group of owners and operators in affordable housing industry around this topic, and we certainly have heard from other players across the industry. What themes have emerged from that?
I think what's been most striking to me over the past year or so, as we have really tried to take charge of this issue and kind of get our arms around it, is just the degree to which it's really impacting everybody right now across the industry as a whole. And we have a work group made up of owner-operators, people in the policy space, insurance brokers, and others. And of the owner-operators that work in New York that make up our group, there's very small owner-operators, there's very large owner-operators, there's people who work upstate, downstate, supportive housing, affordable housing. There's organizations in our work group that are part of insurance captives, that are part of actually a pooled sort of shared risk model of insurance, and even they have seen dramatic increases in other challenges. And to me, that just shows the broadness of the issue and how it really is industry-wide and how there really is no one sort of magic bullet solution. People, put forward things like captives, and they can help, and they sort of things that can be done in interesting ways, but, even they are kind of seeing the impacts of this. Enterprise worked with Supportive Housing Network and NICEHAF and ANHD some years ago, was probably 2018, 2019, when this really kind of first started to bubble up and kind of reach all of our collective attention, and people coming and saying, my premiums have really been going up a lot, or others dealing with this. And they went into HPD, HDC, and there was a real peeling back of the underwriting standards and guidelines that helped to kind of dictate the financing for these projects, and there was a collective effort to kind of bring up to a more realistic standard what people were really paying for insurance, and that was a successful effort. But what we've seen since then is that number has just continued to rise, and so that really has to be kind of an ongoing part of the conversation. And a year or so after that, all these groups were successful in legislation to get the Department of Financial Services to issue a report detailing these challenges for affordable housing, putting out some numbers and some data. And so there's been these kind of steps along the way where this has become a growing issue, but I think really over the past probably 2 years, it's gone from area of concern to a real crisis point for the industry. And I think for all the reasons that we've heard from the owner-operators on the panel, we can see the real impacts of that. But now I think it's really impacting everyone, and more than ever sort of has everyone's collective attention.
And Amanda, you talked about the things that we can control, that there are some things that are unexpected, some things that you can't necessarily account for, but that there are elements of opportunity and the things that we can control through risk mitigation. So can you talk to us about what Camber is doing and how you all view risk mitigation, and what should be some of the considerations for others that want to take that approach as a way of containing insurance costs?
Sure. Like I said earlier, our number one priority, it's kind of written into our mission statement, is providing safe, affordable housing. So a lot of the things that we're doing, we've been doing before our premiums started rising, but we've realized this is also still a good thing to do. My background with emergency management in New York City, we used to always say that 90% of fires are preventable, right? So let's focus on the prevention and do things there. We've kind of broken things into 3 buckets. So property hardening, property maintenance, and education. Property hardening, I think, is a little bit more difficult, a lot more expensive. I think we try and retrofit where we can and things like that, but for a lot of the things that we would like to do to our buildings, they would not make it affordable anymore. So those are kind of, you have to do a little bit of a cost analysis there. We try and do smaller things around security enhancements in the buildings. If we could do flood and drainage system mitigations, even the smallest things, right, to kind of cut back on these loss claims. We found that to be successful. In our property maintenance, I think one of the things we've tried to implement are fire door trackers, right? So all of our properties every week have to submit a form that basically says, I walked the building, I checked every fire door, and it is operational. They seem like small things, but these small things really add up when you have a fire. The FDNY spends, hundreds of thousands of dollars trying to just get the campaign of close the door, right? If you just close the door, it could significantly, reduce the risk of death and damage to the building. So those things are very important to us. Weekly building checklists, right? You're walking the building, you're making sure that there's no impacts to secondary egress things, fire escapes. Nobody puts a planter on the fire escape, right? These are all small things that having active maintenance staff can do. We've also worked with consultants, one of the consultant groups, they're all retired firemen. They come and walk all of our buildings, and then they'll go through and make recommendations. We found that to be very positive. We've gotten a lot of feedback from them. Different types of inspections, and then also relationships in the community with the fire department, police department, and things like that. We've also found that to be beneficial. And then moving on to education, training our staff, right? When there's a small incident, how do you respond? How do you report it? And then how do we prevent it in the future? Was this a preventable thing? How do we make sure it doesn't happen again? People love to leave food on the stove, that's unfortunately. So how do we work with residents to provide them information? Doing things like banning e-bikes, right? Everybody knows what's going on in the city, making sure that our maintenance staff are keeping their eyes out, that if they see somebody bring an e-bike in, you got to get it out. And just staying vigilant in the buildings, very important. And then for the residents, once again, prevention, smoke alarms, making sure that their doors shut when you leave. Everyone should know that. When you leave your apartment, your door should slam behind you, and if it doesn't, you should call your super. And then what to do in case of a fire, because we know that people operate from muscle memory, right? If you know the way you're supposed to escape or what you're supposed to do, it's like they teach you in school, right? That's why we do fire drills and things like that. And then the other thing is, how do we make this stick, right? If we're telling people, shut the door, evacuate, don't evacuate, some of this could be confusing. So we did some research and we realized we should incentivize people because everybody likes money, right? So maybe if we give some people some money, and then how do people want to take the information? Everybody loves a video, right? Under 3 minutes. That's what apparently you have to do, a video to keep people's attention. So we made a 3-minute cartoonish video on fire safety that all the information's from the fire department. We had the consultants also review it, and it's basically how to prevent a fire and what to do in the event of a fire. I think one of the other things is, you know, what you do in a fire in a high-rise building versus a low-rise building is very different. So we addressed that. And once residents watch the video, they get a $50 rent credit that automatically goes on their bill. And they're allowed to do it yearly. We place it in all new move-in packets. And as of today, we've had about 1,400 residents watch the video and about 70,000 in rental credits. We've gotten great feedback on it. We'd like to be able to get it in many more languages than what we currently have available. And then the other thing is when people sign new leases with us, we make sure we're trying to give them as much information as possible. So shut the door campaigns, information to the fire department, and things like that. So we found it, like I said, I don't know if it's going to be reflecting in any price reductions, but it makes us feel much better that our buildings are a better, safer place to live for folks.
Just to add, I loved your $50 rent credit idea. You know, from the loss control standpoint for our folks, like we're big on just sending out like the monthly newsletters and everything, but you know, I think we'd all agree a lot of times you get something in the mail or whatever, or even in your email and you look at it, you throw it away. But, you know, putting $50 in front of it and watching a short like movie, like that actually sticks and it keeps safety and all that prioritized. So I might steal that one from you and give it to our loss control folks.
I would watch a 3-minute video for $50.
Yeah.
No, it pencils out. It pencils out. You know, it's almost like $15 a minute. It pencils out. We all might watch it even a little longer if you added more rent credit to that.
There you go.
But Jim, how are you thinking about what's in your control and the proactive steps that you can take in your portfolio?
Okay. So we have been actually blessed because 3 of our projects are basically converted SROs, and with many thanks to HPD Special Needs Housing and HPD Year 15, we were able to do moderate rehabs of all those in 2008, 2010, and 2017, which basically brought up all of our building systems, items that had been grandfathered got brought up. We were able to extend sprinkling. We were able to do that. So in terms of folks grappling with the preservation side of it, particularly if you haven't had any substantial rehabs, we found in terms of working with HPD, stressing the fire safety was incredibly important. So that has put us physically in about as good a shape as we could be. What we also do is basically we try to ensure in all of our projects that that we are known to the local precinct, the local firehouse, and all the other emergency providers, so that ideally you can never say who your emergency person is going to be, but it's our wish that that if particularly if the fire department or the police come in, that they know our project, they know our tenants. We also basically bring on we have periodic visits with FIND to go over fire safety, and we are also considering our last two fires have gone through a lot of thinking about what more we could do in terms of providing the tenants with things inside their units and more education. So that's basically where we are at right now, and certainly because of our recent history, we want to do a whole lot more.
Dustin, turning back to you, as a broker, you have a window in how insurance companies operate and how they view multifamily housing in terms of risk. Can you talk about the importance of strong risk mitigation efforts?
Yeah, for sure. So, right, in navigating through this hard market, risk mitigation, loss control is more important than ever, right? My job, you know, when I'm working with the insurance carriers on behalf of my clients at renewal, is to paint the greenest picture I can, because, you know, the carrier's perspective right now is either big increase or I'm getting off of this, right? So I want to paint the best picture I can for my clients to show these underwriters and to show these carriers that, hey, this is an organization that prioritizes risk management and prioritizes loss control. They're a good risk. So a lot of that is starting the renewal process early and talking about, okay, I can tell them all the, you know, the whole laundry list, a lot of them that Amanda mentioned earlier, but like, let's show them, right? So let me see a schedule of the planned building upgrades that you have coming down the pike, right? Let me see, you know, the minutes from any quarterly safety committee meetings that you have. Let me see the invoice for the receipt for all the stovetop fire suppression systems in all of your units, right? I want to paint a picture to this underwriter like, hey, loss control, risk management, all that is a top priority for the executive team and the culture of this organization, right? Amanda kind of said it. It might not mean you're going to get potential discounts or savings on your insurance, but you're really going to put yourself in a situation to navigate through the hard market and mitigate massive increases or getting non-renewals. And then on the backside, keeping your loss ratio and your claims down so you actually can create a competitive environment amongst the carriers to bid on your insurance, as opposed to being stuck or married to one or being forced to go in the not admitted marketplace and deal with the rates that they charge. So being hyper-focused on not only doing all these risk management initiatives, but creating a culture, educating, you know, property managers and supervisors on the importance of why this is so important, and creating that culture, it's more important than ever right now.
And Patrick, you mentioned the work group that Enterprise has been leading, working through and talking about policy solutions broadly. How is risk and loss mitigation and those things owners can control factoring into those discussions?
So we recently at Enterprise had a webinar where we talked a lot about these risk mitigation techniques, and we brought on people doing kind of creative things like we're talking about, and you know, in the fire space, in the e-bike battery storage space, and different things with water detection devices, and all these different techniques which people are doing. And we wanted to kind of bring that to the industry in New York as a whole, so people can share that information and kind of be aware of things that they can take under their belt if they have the capacity or the resources to do it. And there was, we had huge turnout for that. People are very hungry for those kind of techniques. But I will say, as important as it is, and building safety and resident safety is a positive end goal in and of itself, and something everyone should be focused on. As we talk throughout the industry, there is a degree of frustration with the insurance companies when there seems to be no kind of transparent link between these things and people's costs. And we've seen this play out in a whole range of ways over the past several years, but we've been hearing from owner-operators who have seen skyrocketing insurance premiums, and they've said to us, we haven't had a claim in 15 years. And so, finding those links between these things and kind of what's going on at your property and having that really be reflected in a real way in your insurance premiums, I think is going to involve a lot more transparency with the insurance companies. I think it's going to involve a lot bigger role for Department of Financial Services, who oversees the insurance companies. And so we're starting to think about, as important as it is to do all these things, what are the tools at our disposal to ensure there's some connection between your building and what you're doing and being a responsible property owner with a good record? What's the connection between that and sort of how you're treated by insurance companies? We think is an important part of the conversation. And we're also at Enterprise very careful as we bring some of these techniques. It's really important for us to bring the kind of education so people know what's available to them. But we want to be careful too not to just kind of create a new floor standard that insurance companies can point to and say, all these creative things, and say, well, you have to have a 3-minute video for your residents for us to even consider writing that policy for you. And so, it's things that are good to haves, and it's things where people are going above and beyond, and they should be rewarded for that. But not every owner operator is going to have the operational capacity, the staff capacity to do some of this, the resources. So we want to make sure we're not setting a floor, because we think, affordable and supportive housing is already a good bet, and it's a good, it's a strong industry with a lot of players doing, with a lot of resident care, and particularly in the supportive housing space, as Jim talked about. Supportive housing itself, with the kind of focus on resident services, with the 24/7 security, with the walkthroughs of the property, there's things that are already going on sort of as a standard that should be positive for from an insurance perspective that are already sort of not being factored in.
And so, Amanda, for you, because you guys have taken on so much loss mitigation approaches and innovations, is that translating into reduced costs? Is that translating into greater coverage, lower premiums? What is that translating into? No.
It's a hard no.
It's a hard no.
It's, I know this is an oversimplification, but it feels like, if I take my defensive driver's course, right, I know I get 20% off every 3 years. I know I get a certain amount off, and we've had...
Yeah, they have the good driver's credit. Do we have good owner's credit? We should have good owner's credit.
It's like, and we would be happy, to, if we knew about these things, talking about transparency, right? Like, we know we can't do everything, right? We know we can't retrofit all of our buildings and install copper sprinkler systems and things like that. But if there are other things that we can do, we would love to be able to do them, but nobody tells us, or our insurance companies do come and they'll walk the properties, but they seem to be differences in even of opinions sometimes, or like we're arguing about which is the right fire door for like a window or something, and they want I would really like someone to say, like, listen, we looked at your building, and if you guys were able to implement X, Y, and Z, right, we know that we would be able to, reduce your costs. And I know it's not that simple of math, but we also wonder, like, because of the work we're doing, are we just like slightly holding the floodgates a little bit? Like, are we doing anything? And, maybe our premium should have increased 35% and they only increased 33%. It's hard to say because there isn't that level of transparency.
And whether the costs that you've put in these risk mitigation efforts offset that
Exactly,
reduction, right?
like, we would love to be able to know that, doing the installation of the, the smoke things over the stove, right? We would have to look at our portfolio and be like, okay, where does it make sense to do that? But we can't do that if we don't know if it's actually going to impact anything else, right? So we do things where we can because we think it's the right thing to do from like a moral obligation, but it would be really nice if we could do it and then be like, not only morally, but financially, right? And then figure out where to best do this.
Dustin, I'm not going to put you in the hot seat.
I know, I felt bad, sorry,
Are
Dustin.
you staring at me or through me?
But, and we talked about this earlier, about there's a lot of variables that are impacting and causing this crisis, and the additional solutions that may be worth exploring. What else is on your radar, Dustin? What other ideas or approaches should be considered as we think about insurance and the nonprofit industry that could really be helpful?
Yeah, great question. And we've heard this question multiple times from clients and other third parties. A lot of people bring up captives or risk retention groups, but the truth of the matter is, those just aren't options right now because of the symptoms that we're dealing with in the marketplace, right? Captives require a very large amount of capital to fill a claims reserve to start with. And when we're talking about, New York housing, right, you're talking about very expensive and very high risk. So that's not an environment for creating a captive. We've also had, questions about, hey, like, are we at a point where maybe the feds could step up? Is there any kind of like ceiling or cap that, we can be limited at? I think, Patrick, you mentioned, NFIP, like for flood insurance. I haven't heard of anything from like the federal level, but I think the thing to remember here, like especially when we're talking about like flood insurance, if you have a building in a flood zone, there are no insurance carriers that will provide coverage there. That would be not a good risk to take. So right, when we come back to New York housing, right, there's still primary admitted A-rated carriers that will provide coverage, although obviously, right, it's expensive. But from the Fed standpoint, if there's still options, there's no motivation for them to step in at this place in time. Really, I think, that's where we come back to some of the advocacy work that we can do with organizations like Shinny. Because the problem, isn't the insurance market. The insurance market is a symptom of the problems. A lot of the items that we noted with regards to social inflation, the consequences that it has on the insurance market. So working and advocating towards, fixing those problems, the roots of these symptoms, I think that's the goal, and that's when you start to see the insurance market soften up. You start to see more players that are willing to offer coverage. You create a more competitive environment, and then rates go down, coverage goes up. So unfortunately, there is no silver bullet for an alternative to traditional insurance right now, just given the state of the market.
And Patrick, how is government responding? How is New York State government responding to the host of these challenges and these issues? And then what are some of the, if you can highlight some of the state law changes and state level conversations and the conversations with the agencies who are really integral and also want to make sure that the supportive and affordable housing portfolio is sustained?
Yeah, I think over the past year, as there's been more of an emphasis on this as a problem and there's been more attention to it, the state has been more focused on this issue as it relates to affordable housing than it had been before. And so, our group, Shinny, and a lot of the other advocates around this, and probably many in this room, were really instrumental this year in pushing to advance a proposal that the governor had raised around ensuring there could be no discrimination against affordable and supportive housing by insurance companies. And why that was an important issue on the table was that we have heard from members around the state, we have seen in our own enterprise role into these projects, that there had been insurance companies who marketed very openly on their marketing materials, sent email responses, really would put in writing, we're not going to insure this product because it has too much affordable housing exposure, too much supportive housing exposure. It has senior housing. It's a homeless shelter. And so, we felt at a minimum, there's still a lot of other symptoms and problems out there, but it seemed, fundamentally unfair that without any demonstration that affordable and supportive housing was riskier or more prone to claims than multifamily housing outside of affordable and supportive, without any evidence of that there could just be a wholesale, we're not going to cover affordable and supportive housing. And so what the state did this year through the state budget was say insurance companies can no longer use that as the sole basis for denying coverage or for factoring it into rates. So they're still allowed to use their actuarial analysis. They're still allowed to point to other real tangible things, but they can no longer just say we're not going to cover affordable and supportive housing. So that was an important step. That passed this year in the budget. There was a lot of insurance industry pushback against that. But to us, that was sort of an important threshold issue where, at the very least now, to the extent that this is still an issue with finding people to cover it, you're going to have to come forward with what your actuarial reasons are for this housing, and you can't just blanketly say we won't cover that housing. So that was important. But we know in hearing this discussion that that's not the be-all, end-all of pricing, of how people can afford these increases, and sort of some of these issues we're talking about. So there's got to be more on the table beyond that. And so I think it's on us at Enterprise and Shinny and the other advocates to kind of continue pushing this as an issue. And so in our work group, we're trying to do that, and we're pulling together all of the different ideas that have been raised as this has become more of a prominent nationwide issue, specifically around kind of state and local solutions. So, things like, could there be a state-backed fund to help affordable and supportive housing pay for some of this, that, maybe it kicks in at that excess level, that sort of catastrophic loss level, where, it's not kind of tied into all these global factors like we talked about, but it's just kind of something that would cover projects that hit that high rate, and it can make things more affordable for owners. Are there CRA equivalent or a CRA model for insurance companies in New York? And you kind of think about the origins of the Community Reinvestment Act, and kind of similar in terms of a disinvestment, kind of a walking away, seen as a risky asset, some of these neighborhoods. And could there be some kind of CRA requirement, but also some benefit, some credit for insurance companies willing to work more in affordable and supportive housing, or in the Bronx, or some of these areas where there's been so much, where it's so difficult to find this coverage. We're also looking at insurance requirements of lenders, of the housing agencies, because the insurance costs that you pay are tied to the kinds of insurance you're required to buy. And so we're trying to look at the auto coverages, the pollution coverages, the limits, the liability limits, to say, do these kind of make sense with the current insurance market out there? Or any of these duplicative, or there kinds of insurance that might cover some of this, and it's allowing the owner to buy less coverage in a way that's not irresponsible to the risk, that's not just saying, well, we forego coverage or do away with coverage, but are there ways to kind of adjust it that can find some savings up front? So, it's a multifaceted kind of solution set. It's going to be, involve a lot of different things. But we kind of continue to talk through some of those other solutions on the table. And the last thing I'll say that makes it challenging is that, there's lots of other models in other areas that have had challenges because of all these underlying issues. So, West Virginia had a insurance fund for nonprofits that was a state fund, and nonprofits who had difficulty getting insurance could go into that. Well, they had a number of catastrophic claims to that fund, and now that fund is in a very precarious financial position. So, it's complicated, and we're looking for models and things that work, but, the underlying issues make this very challenging.
And Amanda, this is a question that just came to me and Jim. Are there other government-related solutions and ideas that should be on the table And what do you think of the ideas that have been considered so far?
I think they all sound great. I mean, at the end of the day, I don't care what the solution is, as long as there's a solution that helps us in a positive way, we're open to it. I mean, I think what we've been hearing from Patrick and Dustin over and over is like it's a very complicated problem, right? And the last thing we want to do is advocate for a solution like you just spoke about in West Virginia that actually, we think is a solution that actually may not be a solution, right? And so I think having the best minds and people who really understand the problem in a way that whatever solution we're coming up with is not just kicking the can down the road. And, that's the problem with insurance, right? You don't need it until you need it. And so it's very easy. And it's like I always like to say, future Amanda is a better Amanda. So I'm going to procrastinate and do things tomorrow. I think with insurance, right, people like to think, oh, well, maybe we can cut coverage here, cut coverage there. And, that's not ideal either. So, I mean, we're open to any and all ideas, but I do think that some government intervention is going to be needed at some point because we're not going to be able to operate in this theater for much longer. And affordable housing is a fundamental part of our housing stock in New York City. It's something like 55% of all rental units are governed by some type of affordable, rent stabilized, whatever it is. There's a huge amount of housing stock that New Yorkers rely on every day. And so if we're not able to figure this solution out, we're going to be impacting individual people's lives and families directly. So.
And Jim, what do you think around the idea of a government intervention? Is that something that should be on the table?
Well, I can't say that I or us at HSI have all the internal expertise for all these complicated questions, but we certainly would advocate for whatever is best for supportive and affordable housing. That's our key. In between that, what we need to do as HSI, and I think all of us here, is keep on doing what we're doing and making it better. Keep on having our front desk do the frequent walks of the building on a daily basis, make sure that we are going into our tenants' apartments and on a monthly basis as they're contracted to do. We have the checklist of what they need to have there, and so if the tenant doesn't know enough to get their smoke detector fixed, our case managers will highlight that. In terms of what we also do to keep pushing is for tenants who we think have safety issues, we also have a specialty cleaner that works for our social services. So for us, it's really trying to do what we do now, do it better, do it more thoroughly. And we will support everything else. I'm not equipped to talk about the fate of captives, but I am here basically to say that HSI really believes in sharing data. We're happy to share more about our experience, and if you want to send me information for anything you have and ask questions, it's jdill@hsi-ny.org. I would love to hear from you.
So before we turn it to audience Q&A, we certainly want to make sure that you all have the space to, put out there what you think the call to action should be, what folks should be working towards, what they should keep on their radar. And while this issue is certainly complex, New Yorkers don't shy away from the complex. So what's the call to action? Maybe Patrick, we'll start with you.
Sure. I think the solutions that are going to be necessary to really turn this around are going to involve everybody in the industry. And we were successful in getting the state's attention to this problem this year at the state level, and it's going to be important to keep their attention because it's, oftentimes the legislators, when they sort of check a box that they did something in one session, they have a lot of things on their plate, a lot of things they're focused on, and they might be of a mindset to say, okay, affordable housing and insurance, we tackled that last year in the budget. What's on our agenda this year in the budget? But this is an ongoing situation that's going to require their attention. And so, for those who have projects deal with elected officials, keep talking to them about it and talk about your challenges. So when advocacy organizations and others go, they will have heard it from the partners and nonprofit organizations and supportive housing providers that they know very well in the space. It's going to be really important. Bring your solutions, bring your data, as Jim said, Enterprise, the network, NISAFA, all the other groups that are kind of working together on this issue. We're stronger when we have data, anecdotes, what people's increases are, what they're experiencing. We bring that to legislators and others as we think about this. Bring other ideas. I mean, some of these things around, hey, I heard there's a nonprofit fund in West Virginia. Did you ever look at that? And then, organizations like Enterprise with the capacity and policy staff to be able to kind of go and research those things. So keep communicating with organizations like Shinny and Enterprise and others focused on this from a policy perspective. Keep bringing your ideas, and we'll keep pushing the solutions as much as possible. So stay engaged.
Amanda?
I think that's it's like the squeaky wheel gets the oil, right? I think it's important making sure that we're all tapped into organizations like yourself, so that we're making sure that we're keeping the same narrative, right? That we're telling the same story over and over, and making sure that anytime we have that chance to be able to tell that story. And I think I'm going to try and hold myself accountable in the sense that when I'm hearing things, making sure that I'm sharing that. I'm going to bring it back to be able to figure out, what data can we share and will it be helpful? And figuring out when I'm in different spaces, what resources can I lean on to kind of bring back to keep that message going. Because I think the only way that we're going to be heard and get action from government officials, if that's what we need, is just making sure that we're being loud and persistent, and that we're all clear that we need a solution.
Jim? Call to action that this room should keep front and center?
Yes, I don't know if I have anything more to add. It's just, definitely this is going to be data-driven. Through the great work of Patrick and the Enterprise Group, we have a lot of information on primarily affordable. So I would certainly love to hear more about what's happening in supportive. And so, yes, it's JDILL@hsi-ny.org. I would love to hear what your experience has been. If you are significantly supportive housing, or if you have others, because I can't tell you that your experience would be the same as ours, but I would love to hear more.
Dustin?
Yeah, I'll go back to, I guess, my common theme of the day is control you can control, right? And that's not just, for the providers, right? That's for us as well, right? What we can control, like we are, kind of hand fighting our friends at HPD and HTC on insurance requirements for a lot of these projects, right? The requirements that they've had for 20, 30 years aren't realistic with this current market. So we're providing them with data, giving them perspective on the marketplace to say, like, hey, you can't find a admitted carrier to provide owner's interest liability coverage for a $60 million building in New York. They don't exist, so you can't require it. Still love anybody that's with HPD in here. But and again, on your side, right, creating that culture that is hyper focused on loss control, safety, risk mitigation, and keeping track of that data. Again, like my job and any broker that you work with, their job is to paint the best picture of your organization to underwriters. So if we're armed with the right information to show all the different items you have in place from a loss control standpoint, that makes our job a lot easier in painting that picture, and it gives us a lot more leverage to create a competitive environment against 2, 3, 4 carriers, as opposed to just kind of relying on one and just hand fighting with them. So Yeah, control what you can control, really push for your executive team and, your senior management team and the whole trickle down to be hyper-focused on really creating a safe environment and avoiding claims instead of, reacting to claims.
Thank you. So we are now open for Q&A. If you want to come up to the mic and introduce yourself and direct your question.
Hi, my name is Lori Gervin. I am working with the Brownsville Partnership. Although my questions, some of the things I'll mention don't relate to them specifically. My last two major claims that I've had to deal with were actual municipal infrastructure failures, which is getting more and more common as well, i.e., street bursts and things like that. And, I want us to get away from suggesting that if you have a claim, you're somehow a bad provider. Stuff does happen. So I want to talk a little bit about, because nobody's touched on the claim process. And, as somebody who's managed a lot of housing development, the most head-banging processes I've ever managed have been insurance claims. Everything from, their preferred vendors and the quality of work to fighting over amounts to fighting over lost business income. And so maybe this is a question or maybe even a recommendation. How do we also ensure that we're getting what we've been paying for all these years in terms of the quality of work and response when we have a claim? And I actually have a bad joke, which is how many insurance adjusters does it take to change a light bulb? None if they don't show up. And that's from direct experience. The second end of the spectrum I'd love to hear about is tenant insurance. If you're using it, how you're using it. When you said you were giving $50 of rent amount, did you consider tenant insurance? And it's not just for us, for people who've been vulnerable and lost housing, to go through that again is extremely traumatic. And what can we do to do the best for safe landings in the event that you actually do have to evacuate or relocate people? And so I do have a policy thought too, which is, why aren't we bundling in tenant insurance like a utility or something else into how we're supporting rental assistance and rent subsidies, right? Like, could we actually think about capturing that cost as just a regular cost on the tenant side? So two ends, claims and tenant insurance. Biggies, I think.
Well, I can talk to tenant insurance because we just started thinking about it. So I certainly, we have been asking about it. I don't know if it's feasible. I've been talking to our broker. He sent me some stuff, I think at 11 a.m. this morning, that I don't think I'm going to be able to absorb. But yes, we are considering that. We have no idea if it's feasible yet. Our broker's first pass is that he saw nothing prevented us on it. And where we would be is have to make a decision, say, for all our supportive tenants, we pick up all the utilities, or else, 50% of the lights would be out. So this would be something that we would either have to pick up ourselves, or basically try to see if it would, in essence, be a self-insurance. If it's something for us, basically our last insurance policy, everything all put together for the entire group, is around $550,000. If this is like a $100,000 deal, then we'd have to figure out, would there be some way where we would take higher deductibles on our coverage, and in essence, basically not do the tenant insurance and say that we're self-insured. So great question, which I had thought about it 3 years ago, and that's what I can tell you on tenant insurance.
We have not, on a wide scale, implemented that, but I really appreciate that suggestion. In my previous life, I spent a large amount of my career responding to disasters, specifically in New York City, and people not being able to return home. And the city housing people in hotels for extremely long times and things like that. And then on a much smaller scale, I used to drive like an ambulance and go to fires for the Red Cross, and you'd rehouse people for a night, and then people would say, well, where do I go now? And, you know, most owners do not have other apartments that people can go into and things like that. It's wildly destructive. And like I said, though, people always say after, I wish I had renter's insurance, right? But I think one of the things that we're also up against, this is affordable housing. Our residents are on very, very limited income. Like I try and explain to people all the time that I'm like a $25 extra fee is the difference between certain people having like lunch and things like that. And so I think being able to figure that out in a way that would be financially feasible for folks is it's a really great idea. So thank you.
And on the question of claims, I didn't forget your first question. The question of claims and how to get responsiveness and not the fights about what's covered and the quality of the work and who you work with. How do you feedback on that?
Admittedly, I forget the scenario that you brought up because it was so long ago.
How many claims adjusters does it take?
I remember that part. No, I think, you know, like I said, when it comes to like controlling what you can control, there's some claims that you can't control, right? So I resort back to like what a lot of our legal folks are doing and loss control folks, and really this is what I would recommend when you're working with your broker too, is having your contracts reviewed, whether it's with city, state, municipalities, or whether it's, you know, other third-party organizations for, you know, third-party risk transfer. So if there's a claim that isn't really your fault but impacts your policy, impacts your loss runs, making sure that from a coverage standpoint, whether your carrier is covering it and then subrogating against another third party to get that back, or just pushing all that liability to another party's insurance, that's crucial. A lot of times the devils are in the details with these contracts, and if the language from an insurance standpoint is advantageous to yourself and your organization. So again, I don't know if that answered your question because I kind of forget the scenario that you put about. I remember you said municipality. Yeah.
And it takes a lot of time and rigor and diligence, you know, and there's a whole ecosystem out there in the for-profit private sector of, you know, expediters and mediators and folks who are there to go to bat for you. And it takes that to make sure that the quality of the work and the replacement and everything is really up to snuff. You know,
Right. It's hard for me to speak for like other vendors throughout the process, but when it comes to having a plan for that process, right, I'd suggest when you're working with your insurance brokers and you're doing quarterly safety committee reviews, having them come in, having them bring in their loss control folks and walking through your team on what that process is, right? If this type of claim happens, here is the process that we can control internally, right? Here's step 1, step 2, step 3. When this happens with the insurance broker or the insurance carrier, then this is what happens on our side of the world with the adjusters. And then make sure you're doing this. And having that almost like we were talking about earlier, just something as simple as fire drills, kind of making that part of your agenda with regards to those, you know, 4 or how many meetings you're doing a year. So when it does happen, it's kind of just like, oh, boom, we talked about this all the time. But again, for the actual, like, you know, vendors that are doing the work, I can't really speak to the quality of that. So I hope that answers your question a little bit better.
Next question.
Hi, thanks for the panel, first of all. Really, so I work at NYC HPD, not here in an official capacity, but never thought I'd be so fired up about insurance before I started working for the supportive housing loan program at HPD. But I guess a couple questions. So one, I missed some of the panel. I think there was maybe discussion around some sort of court case against the insurance industry. not to demonize, but I guess I'm curious why residential insurance carriers aren't covered by like federal fair housing law. My understanding is that they're not, and there's like a whole battery of things that you can't discriminate against, protected categories that cover, when you sign a new lease or if you're looking for an apartment. But that whole kind of apparatus does not seem to apply to the commercial insurance industry. I guess, is there any effort to make it so? Is one question. Maybe that's it. Yeah.
I'll start, and Dustin might have more of the particulars, but I'll say that, as we started to think about what the state was doing this year around banning discrimination by insurance companies against affordable and supportive housing, we at Enterprise were almost surprised that that wasn't already a law on the books that just needed to be enforced, because we said to ourselves, well, source of income discrimination is prohibited in New York and has been for some years, so an owner of housing can't say I won't take someone based solely on the fact that they have a rental assistance voucher or some other form of income. And so, that's been in effect, and that's sort of a fair housing standard and a law here in New York that's been in effect, but that wasn't the case for insurance companies in this space. And so, without kind of understanding some of the legal nuances, I'll just say that, historically, insurance companies have been given a lot of leeway with respect to their sort of actuarial basis and being able to accurately price their risk. And, I think the Department of Financial Services kind of sees, in part, their role as sort of instituting that and being sure insurance companies can be viable and kind of look at risk. But, it is in the law that they're not allowed to sort of red line, they're not allowed to blanketly discriminate against areas. And so finding what the line is between, redlining discrimination versus looking at crime scores versus kind of looking at, geographic areas and maybe applying another standard that might fit the muster of the law. But, and it kind of goes back to really having a window into that transparency of kind of what they're basing these decisions on. Is it fair, or is it just kind of redlining under a legal checkbox that they're permitted to do, and kind of breaking down that dynamic?
Yeah, I mean, carriers, when they're looking at classes of business, I've never gotten the sense that they're discriminating. It's more about exposure, right? Care, custody, and control. So when they're looking at, multifamily, residence compared to an affordable housing unit or facility, right? There's more care, custody, and control in a multifamily unit, comparatively speaking, to an affordable housing unit in their perspective. You mentioned crime scores as well, right? So they look at that from an exposure standpoint, and then insurance is just law of large numbers. The actuarial data, they're saying, okay, in this borough of New York or wherever in the country, this is the type of claims that we've been seeing. This is the frequency, this is the severity, this is what the payouts look like. That's how they're really factoring everything into their underwriting appetite. So I never looked at it from a discrimination standpoint. I just looked at it for them as an underwriting appetite standpoint. Like, we have the appetite to write this class of business in this geographic area because of this actuarial data. But it's funny you brought that up, because I have noticed on a lot of the sell sheets of these insurance carriers, they don't specifically say we don't write affordable housing anymore, right? They might even not write it, or they might reword it, but you don't see that like you used to anymore. So again, from my side of the table, I think it's more just about the actuarial data and what is the true exposure. There's a million different types of residences, but they all have different exposure based on the environment and the care, custody, and control that's surrounding them.
To your point, we see now, for everything that we're doing, even health insurance, right? I can see now that the questions they're asking me, I'm like, I know what you're trying to get at, right? Yes, you can't explicitly ask me those questions anymore, but you're asking me for these very other interesting data points that if you have all 5 of those data points, you're going to get what you were looking for. Yeah. And so it's still feels a little bit, I mean, it doesn't feel, I know it is, right? That, back to what I was saying earlier, without the data that anybody is backing up, like, okay, you're saying it's a more risk, it's riskier, right? Do we have the appetite for risk? But like, all right, show me the data. Is it more risky? Yeah.
I mean, listen, there's a state report from the Department of Financial Services and the state's housing agency that looked at these practices and the questions and has found that there were some of these questions being asked by providers that did not seem directly related to the assessment of risk and how it would impact coverage. I don't think that's really up for much debate. Now we just want to understand the data and how it relates to what we're seeing in the marketplace. That's the area which we need more focus and more insight around. You have another question?
Yeah, sorry to hog the mic here. Thanks, that was really helpful. I forgot when I was up here, the other question, just kind of related to the first. So, like, I guess my question here is, what's happened in the last few years specifically, and maybe I missed it as earlier part of the panel, that have led the market to price premiums for affordable and particularly supportive housing, what I work on every day, so disproportionately highly. I mean, I say disproportionately in that, I guess, even, I've been at HPD for 5 years, and when I started, we would always underwrite, I'm an underwriter essentially is the main thing I do. We underwrite to a per unit amount for insurance, like certain amount per year. That was the standard. HDC in New York City published that standard and updated every year. And the last few years, maybe the last 2 or 3 years, we've shifted away from that entirely because the costs have gone up so much that we're now underwriting just based on a quote. So like, we don't have a standard anymore, essentially. Underwrite based on the quote. And I don't know, I'm just not an expert on insurance, but like what exactly has happened recently where like it's breaking underwriting, like it's breaking the projects. They can't work anymore. And it means that there's a lot more public subsidy. Again, this is not me representing HPD, but just my experience. The public subsidy that has to go into the projects to make up the gap, the shortfall, is crazy. I mean, I don't understand how it's sustainable, and I guess the question is just about regulation and what checks and balances there are on the insurance industry in a fair housing realm or in a CRA type of. I think that's interesting, Patrick, that you discussed that. So
yeah, and because we Dustin gave us such a full presentation earlier on, which I'm sure the network could share with folks if they're interested, that talk about some of the drivers around what is maybe contributing to this increased cost. And, coming out of that the state legislative session around anti-discrimination provisions and the fact that we now have this key state agencies really paying attention to it, I think we want to unearth a little bit more what you were asking, which is what is really directly contributing legitimately to these costs, and are there recommendations and ideas that could be uniformly adopted? That's very different than risk mitigation. That's very different than pooled insurance. That is, are there approaches that could help all of you in the room and everyone else who's experiencing these pain points? And that's, I think, the call to action for this room, right? That we don't have clear answers today. We don't have yet an approach that we think could work across the board, that it does not cost you money to implement and does not lead directly to a reduction in costs. And so this is not a settled area. There's a lot more work that needs to happen here. And we call on all of you to stay directly engaged and bring to light the challenges that you're facing and the ideas that you think should be covered. And so thank you to the panelists for your great insight. Thank you all for your participation, and I hope the rest of the day is successful.